Okay, we're gonna talk options quick here. So this, it's kind of late now. It's a little after midnight, but so Tuesday. This is the first day the market opened up this week. Typically, I've been selling a lot of weekly options, and I'll probably always continue to do that. But lately, I've been mixing in some monthly options in there too, and I like that because you can sometimes just it's just if you can just do it monthly, it's just a little bit less going in there maneuvering around. So some options, some tickers, they trade weekly. Some tickers, they only trade monthly. It just is determined by the trading value. Actually, some even trade daily. Some of the highest trading ones, like I know QQQ is a daily. Actually, yeah, we can pull that up real quick. So if you want to look at QQQ and you go to trade options, so look up here, you can see this has each day. So typically, this is not too common. There's only a few. I don't know them all off the top of my head, but there's only a few tickers that you can trade daily. But most of them, there's a lot are weekly and then some are monthly. So QQQQ is daily, but then again, $600, so share price, so got to keep that in mind too. But let me go back to my watch list here because these are a lot of ones I trade pretty often, and sometimes I add and subtract stuff from this too, and I might, if I see like a headline of like a stock that I think's a good stock that just had a bad earnings report, or just some kind of news and like the stock price tanked, I'll go in there and be like, oh hey, I'll drop a cash secured put on this. And when I say cash secured put, I'm actually doing it on margin usually, so I don't keep cash just sitting around not deployed in my brokerage account. So some of the ones I like, look, HIMS, this one's going to be weekly, so a lot of times this one has pretty cheap share price. I mean, I don't know, relatively cheap share price. It's weekly. There's a lot of trading volume, so if you can see, like if I'm selling a put, let's just do January 30th. So this would be not this Friday coming up, but next. I mean, you can really see we've got options that go like every 50 cents, and we can get these placed. So I mean, yeah, HIMS is one I do a lot. I like iBit, Bitcoin's volatile. Any of these on here, I've been trading. So today, so I guess while I was talking about monthly, was a lot of the monthly options, a lot of the tickers that do monthly expiration dates, they expired on Friday the 16th. So now this is the first day that the market's been open since then. So what I did was I bought 3 different tickers today, or sold 3 different tickers for options today. I did 2 that were weekly, 1 that was monthly. So I'm going to start with this big one here. So SPY-M, the S&P 500. So what I did here was, if you look here at the expiration date, February 20th, 2/20. So what I did was I bought 10 contracts. Now that's a lot. I deployed a lot of my kind of available margin collateral for this. So I have 10 contracts, and I sold them for 10 cents each, which you would then multiply. Each contract is multiplied by the 100, so that was $10. So 10 for 10 was $100. And then we can see, actually, And like, yeah, it says I'm down 30%, but when you sell these put options, that's, this once the time decay starts happening, then this will start turning around. But what I would need to happen here is I did a strike price of $68, so, and right now it's at $79.97. So if the S&P 500 or SPY-M drops to 68, I would have to buy 1,000 shares because I did 10 contracts at the 68 mark. So I'd be buying the S&P 500 at over a 10% dip from the highs, which, then we'd get in, so then I would get into probably how I would want to exit that, which would either just be holding and waiting for it to recover, or can turn around and sell covered calls on it. Hold on, I'm trying to figure out. I think it let me click in here. I want to view my position somehow. If I can do that. View. No, wait. I don't think it's simulate my return. Oh, history. Okay. Yeah, cool. This is what I want. So, see, right. I'm like pointing at my screen. I realize, you guys can't see this on my phone. Estimated credit 99.60. So, again, Robinhood, they'll take the fees for that. So I received $99.60 in my brokerage account for opening this today. So that's one of the things with the monthly options. You can get more up front, but then you're kind of locked into that position for a few weeks. So that's why I'm probably going to start mixing like some monthly and some weekly. But yeah, it is nice. Like if I can just do kind of like a bigger one each month, it's just a little bit less trading I have to go in and do. And so let's just look at this first. So 99.60, and then I did two small ones that are ending on this Friday. And again, this is a short week because the market was closed on Monday. So next I did Mr., which is MicroStrategy. This, if you know Michael Saylor, just basically his company, and he just buys a bunch of Bitcoin. When Bitcoin goes up, this stock price does well. So this one's expiring here. You can see 123. So this is expiring Friday. I got, again, this is just a couple bucks here. History here. So I got $2.96 for that. So we had 99.6 for the first one, plus 2.96, 102.56. Oh, dude, I was just in here. Okay. And then the last one I did was the hymns, right? We're talking about how I like this one. So this one I just I picked the lowest price I could to get the lowest price available I knew I would get assigned at. So I did hymns for 23, and the current price is 30. So it would have to drop crazy in 3 days. I just did this just to get something placed. So I only got 96 cents for this, I believe. 96 cents. So today in total for dropping these three options, I mean the one was 10 contracts, but I'm just saying, the three different tickers, the options on this. So I collected 103.52, which I just used to go buy shares already. I already put that money into the market. So that's just a cool way, I think, to make a little extra money for the portfolio. And I keep saying this because I know it's gonna jinx one of these times, but yeah, so far I've never had a contract assigned to me. But if a contract does get assigned to me, or even in this case possibly 10 contracts from SPY-M, it's not the end of the world, because then what I can do is I can turn around and start selling covered calls on it, or I would just wait it out. And then once SPY-M got above 68, so let's say it goes up to 69, goes up to 70, I would just sell 1,000 shares, and then what that would do would that would clear the margin debt that I have, and then the leftover amount, it's just profit. And then again, I keep that premium that I've already received today, no matter what. So selling above the assigned price of 68, I would get profit from the sale, and then as well as the premium I've already gotten. So yeah, so I personally think selling put options is my favorite way of generating income. I think if you do it in such a way that you can't eliminate all risk, but you can do it in a relatively not too risky way, which is what I like to do. I'm not chasing the high premiums. I'm more just looking for things that I don't think are going to be assigned, or if they do, I'm happy to get assigned them. So quick overview on the options. We'll see how these play out, of course, but yep, these are my 3 open positions at the moment. These brought me over $100 that I could use and throw into the market. So rinse and repeat. But yeah, basically just try to keep stacking any way you can. Just keep finding ways to throw money into your account, throw money into the market.